Hello, everyone, and welcome. My name is Adrian Diaz, and I'm an enrollment coordinator here with the CUNY School of Professional Studies. My colleagues and I are thrilled to be with you today to discuss a very important topic, budgeting. Before we get started, I just wanted to go over some quick housekeeping items. First, to make sure that we can all clearly hear the conversation, all audience members' microphones are muted. Please continue to keep your microphone muted throughout the presentation. Also, we encourage you to ask questions, but for any questions you have during the event, please use the chat box feature. Questions from the chat box will be answered during the Q&A session, which will follow the presentation. And if you experience any technical issues during the webinar, please let us know via the chat box, and our team can assist you. Finally, after today's webinar, we will be sharing some resources with you. So look out for an email with links and information to help you with your budgeting. With all of that being said, I will turn it over to Yvonne and Teresa for the presentation. Thank you.
Good afternoon, and welcome to the Building a Budget webinar. We're excited to be here with all of you to talk about a very important topic within personal finance, and that is budgeting. My name is Teresa Ortiz, and I am the Associate Director of Scholarships at CUNY SPS.
And my name is Yvonne Gonzalez, and I am a Financial Aid Specialist at CUNY SPS, and we will be your presenters this afternoon.
67% of you said that budgets are important, and that is correct. And for those who may have put, I don't know how to budget, or it may be hard, don't worry, we're really hopeful that this presentation will make you feel at ease by the end of it. For today's webinar, we will be reviewing budgeting terms and definitions based on our research and personal experience. Then we will introduce you to Whitney, who budgets using the zero-based budgeting method, followed by budgeting by paycheck, where you will see how Ariel and George manage their bi-monthly budget. Lastly, we will conclude with our recommendations for other budgeting tools and resources. Do note, if you have specific questions related to your personal finance, we encourage you to reach out to a financial advisor or planner. However, if you have any questions about today's webinar, you can always reach out to our office. Now, let's begin. A budget is a record of expenses and revenue over a period of time. Budgets help companies, individuals, and/or families plan and monitor for income, expenses, debt, savings, and etc. on a regular basis. Having a budget or a money plan is the best way to accomplish short-term or long-term financial goals. It is important to identify what are your current wants and needs. Needs are defined as the wants we must have to survive, such as food, shelter, basic clothing, and transportation. Personal finance pioneer Dave Ramsey refers to this as your four walls. Remember, budgets are not exclusive for just businesses and corporations. Individual or family budgets are just as important. In the realm of personal finance, a budget is essential to live within your means in order to meet your goals. The goal of the budget is to lay out your, can we go to the next slide? Ryan, thank you. The goal of a budget is to lay out your finances in front of you so you can see where your money is going and to ensure that it aligns with your long-term financial goals. Budgets are not exclusive to just household expenses, and budgets can be used to plan for any major life events, such as a wedding, a baby, moving, or retirement.
There are many tools out there that we can use to create our budgets. Budgets are personal, allowing a person to use a tool that works best for their lifestyle. You can use notebooks, whether the paper and pen route or a digital version. You can use spreadsheets, either through Microsoft Excel or Google Sheets. I've used both in preparing my own budget. And while I made my own, Excel does have pre-made budget templates that you can use. You can look into features offered through your bank. Some banks will track your expenses for you. Finally, there are apps such as YNAB for You Need a Budget, which is an $84 a year app, Mint, which is a free app from Intuit Mint, and the NerdWallet app, which is also free, just to name a few. Remember, not every budgeting tool or method will work for everyone. It has to make sense for your own needs, and it may take trying multiple methods to see what works for you. So don't give up. Once you have decided on which tool to use, you can begin preparing your budget. You will need to note down your income. An income can include your regular salary, money earned from side gigs or side hustles, or investments. This can also include income from gifts or inheritances. When it comes to your income, it is important to know these key items. How often do you get paid? Is it monthly, biweekly, semi-monthly, or weekly? Keep in mind, it is important to determine your budget period in advance. A budget period is defined as the period between paychecks or income earned. And how much do you get paid? Is it the same per paycheck? If it's not, you may want to get an average of your past month's earnings. Remember, for the purposes of personal finance, you want to ensure that you are using your net pay or take-home pay when calculating your budget. Once you have your income squared away, you will need to gather your expenses. And there are different categories to consider. First, there's fixed expenses. These are those expenses that are consistent, predictable, on a set schedule. So think of rent, certain utilities such as cable or internet. Next, there are variable expenses, and these are predictable in frequency, but may change in the dollar amount. Think of other utilities like electricity, gas, or groceries. Finally, there are the irregular expenses. These are the ones that do not occur frequently throughout the year, but you know are coming. Think of car insurance payments, which might be paid once or twice a year. Debt. Do you have money that you owe for loans or credit cards? This is another expense that needs to be calculated into your budget. What about savings? It is crucial to budget a portion to be put away for emergencies or future expenses.
For today's presentation, we will be going over two types of budgeting methods: budget by paycheck and zero-based budgeting. Let's define zero-based budgeting and take a look at an example of that budgeting method in action. Zero-based budgeting is a method of budgeting where all expenses must be justified for each new period. Zero-based budgets are built with the intention of analyzing the wants and needs for an upcoming period. For example, the time frame between paychecks. Zero-based budgeting does not take into consideration previous budget periods. Understanding how much money you need to cover upcoming expenses, savings, and debt repayments is essential to zero-based budgeting. The idea behind this method is that when you're calculating your budget, you do not leave any dollar amount unassigned. Essentially, every dollar has a job. Whether you're using the income from this period to pay expenses, complete a savings transfer, or pay off debt, the key thing to remember is that your remaining balance should be zero. Don't worry, it does not necessarily mean that your bank account is at zero. It means that your income is equal to your expenses for that time period. Now, why does this method work? Because one, it allows you to know where your money is going, and two, it helps to prevent unnecessary or wasteful spending. To begin, you will need to outline your financial goals, list out all of your income and expenses, and understand your current spending. To provide an example, let's meet Whitney. Whitney is 27 years old and works for a nonprofit organization. She lives in a studio apartment in New York City with her partner and dog. Whitney's annual salary is $70,000 and her net monthly take-home pay is $3,000. Whitney and her partner budget separately, but split the household expenses 50-50. Whitney is familiar with the world of personal finance because she graduated from the University of Florida with a business degree concentrating on finance, and from CUNY SPS with a master's degree in business management and leadership. Recently, Whitney and her partner have set a goal to buy a house together within the next 5 years, and they have discussed saving for a down payment. But first, Whitney knows that she needs to do the following things to prepare for this exciting life event. What is Whitney's current financial snapshot? Well, she has a basic budget where she only currently budgets for major expenses like rent and electricity, excluding any variable expenses, and she does not track spending. She also uses her credit cards to help maintain her lifestyle, and because of this, her credit score is around 600 points. Whitney also has student loan debt, but her payments are currently deferred due to the ongoing pandemic, so she's currently not making any payments. To begin, Whitney outlines her financial goals. Her overall goal is that she wants to begin her debt-free journey to increase her credit score and save money. She sets 2 budgeting SMART goals for herself in 2021. She will start off by paying off her smallest debt balance, which is credit card number 2, within 10 months. The current balance is $1,136.82. She also wants to save for a starter emergency fund. Now, as you may know, the traditional emergency fund is 3 to 6 months, but Whitney knows that she'll be focusing heavily on her debt payoff. She has opted for starting with an emergency fund of $1,000, so she has savings as she continues her debt-free journey. Even with her degree in finance, Whitney knew that she should do more research before she redoes her budget. Using Google, she searched, "How do I create my own budget?" After she completed her research, she decided she wanted to use the zero-based budgeting method. In order to prepare for budgeting, Whitney must first review her bank statement to determine on average how much she spends on groceries. She reviews each line item from her bank account within the last 30 days. The total was $377.92. With that information, she decides to allocate $400 to her April food budget. Next, Whitney is going to create a new budget. Whitney loves writing things down, so her preferred budgeting tool is paper and pen. In order to complete her zero-based budget for April, she begins by labeling her notebook with the due date, expense name, amount, and category. Next, she writes down her fixed and variable expenses, minimum debt payments, and savings. As noted on the previous slide, you can now see that she has allocated the $400 to food, which will also include any money spent for takeout. After writing down all of the amounts, she includes her total monthly income. Whitney is paid once a month, so her monthly pay date is always on the 1st. Her total take-home pay after taxes, insurance, and retirement again is $3,000. But as you can see, her total expenses are equal to $2,856. As you remember, zero-based budgeting means that her remaining balance should be 0. That is key. As of right now, her remaining balance is $144. She decides that she is going to assign her remaining balance to debt. Because she is on a debt-free journey and wants to pay off her credit card, she knows that it is important to make extra debt payments in order to pay down her credit card balances sooner. Using the debt snowball method, she will be adding $144 monthly to pay off credit card number 2. To correct her balance. Her balance on that credit card is actually $1,133.98. As a friendly reminder, the debt snowball method targets the smallest credit card balance first, and then you will work your way up to paying off the largest credit card balance last. For the purposes of this example, we will be focusing solely on credit card number 2. As of right now, if Whitney continues to only make the $35 minimum payment on credit card number 2, it will take her 50 months or a little over 4 years to pay off this credit card, which is why she is excited to be able to allocate an additional $144 extra to this credit card balance. Now, Whitney sets up her monthly budget. She outlines a column for budgeted amount and leaves blank columns for actual amount and any difference. She writes down all of the income and expenses from her previous slide, or in her case, her previous page in her notebook, in the budget column. After she adds up the total income and subtracts the total expenses, she verifies that her remaining balance is in fact 0. As you can see, her extra debt payment is listed at the bottom of $144. Now that Whitney's budget is outlined, her next step is to track her spending for the next 30 days. It is important to track her spending in order to close out her budget at the end of the month. It may seem like a lot of work to itemize your expenses when you first begin, but understanding why it's important to track expenses and how to do so with minimal effort can help you successfully commit to the activity and become more aware of your spending. On her Track My Spending notebook page, she writes date, transaction, amount, and category. She creates a routine schedule to update her tracking and decides to monitor her spending every other day, starting on Sundays. We would like to note that it is important to set a routine schedule so that you can monitor for any fraudulent charges or unexpected expenses and readjust your budget accordingly. Just a fun tip, using highlighters or different color pens when budgeting with a notebook or digital notebook can help you track your spending. As you can see, she wrote categories at the bottom of the sheet and highlighted it using different colors. That way, when she closes out her budget, she can easily identify which category each transaction is in. Let's take a look at what Whitney's spending looks like after 30 days. As you notice, every other day, Whitney sat down with her notebook and wrote down any transaction from the previous 2 days. It is important to note that Whitney may not have a transaction recorded every single day, and that's perfectly okay. She's excited to see how she maintained her April budget throughout the month. Keep in mind that recording your expenses is just another way for you to track your financial wins and keep you motivated on your journey. You can even find ways to treat yourself when you notice you're doing great with your budget. For example, my boyfriend and I like to order out dinner on Fridays when we know that we've cooked at home Saturday through Thursday. Now it is the end of the month and Whitney highlights each transaction with the color assigned in her category key. This is especially important for variable expenses because she knows that variable expense amounts are not the same every month, and tracking her spending will help her to determine how much is spent in each category and potentially help her to readjust her budget in future months. By tracking her expenses, each month Whitney will have the opportunity to analyze her spending trends and adjust her budget accordingly. Honestly, highlighting your expenses is really a personal preference when you're budgeting, but I have found from my own personal experience that it does make it easier to total your expenses per category at the end of the month, especially if you're using a notebook or worksheet when you're budgeting. Next, Whitney refers to her spending tracker in order to fill out the actual amount spent for each expense. She begins with rent and confirms that she paid $800 in April by looking at her Track My Spending worksheet. Next, she then confirms how much she paid for internet, which was $50. She records both of these transactions in the actual column for rent and internet, and then continues this process for each expense moving forward. As you may notice in the difference column, there are some categories where she had money left over, specifically pet, food, and transportation, which means that she'll actually be able to add more money to her extra debt payment. Whitney is now going to analyze her budget. She wants to make note of which categories she saved in and which categories she overspent. For her pet budget, Whitney saved $15.63 because unfortunately, she forgot to order treats for her fur baby. Also, she decided after her initial grocery shopping at Whole Foods that it may be more economical to borrow a family member's car and do her food shopping at Walmart. By doing this, Whitney was able to save $50 on her April monthly food budget. Lastly, transportation. Because of the ongoing pandemic, even though Whitney is working from home, she does allocate $100 to her monthly transportation because she knows that she's more comfortable taking cabs or Ubers at this time. In the month of April, she did not travel as much to see family or friends, socially distanced, of course, so she had a difference of $23.90 remaining. Her total amount that she did not spend for the month of April was $89.53. Whitney is thrilled that she did not overspend in any of the categories for April. Whitney adds the additional $89.53 to her extra debt payment. Now, as opposed to her extra debt payment being $144, you can see by the highlighted line that her actual extra amount that she sent to credit card number 2 balance was $233.53. Let's take a look at why this is really exciting. Because of the $144 in extra debt payment, while including the minimum $35 for a total of $179 for April, Whitney would be on track to pay off credit card number 2 in 7 months. Yes, can you believe that? By adding $144 extra each month, Whitney's payoff period went from a little over 4 years to just 7 months. What's even more exciting is that if Whitney is able to contribute $233 in extra debt payments, in addition to the minimum payment of $35, for a total of $268.53, she will now be able to pay off credit card number 2 in just 5 more months instead of the 7 months from the 144 extra debt payment. However, Whitney understands that budgets are ever changing, and she's not pressuring herself to a specific timeline. She's just thrilled that she began this journey for her overall financial health and is eager to see all that she can accomplish in May and the rest of 2021 with her budget. Way to go, Whitney. To briefly recap, remember, if you're on a debt-free journey, making extra debt payments, or essentially paying more than the minimum, is key. For your savings, try to set it and forget it. By setting up an automatic payment of $100 a month, Whitney will reach her starter emergency fund goal of $1,000 by December 2021. And lastly, be creative. Oftentimes, budgets are associated with potentially being boring or maybe just for people who love math, but there are so many ways to make budgeting work for you and your lifestyle. Don't be afraid to try printables, spreadsheets, fun debt payoff sign reminders around your home, or even a notebook and pen. There are so many options out there.
Next up, we'll review budgeting by paycheck. In a nutshell, you assign your expenses to each paycheck. This is helpful for people living paycheck to paycheck, or for those who find that a monthly budget is just not for them. Especially since not all of us are paid on a monthly basis, creating the budget that looks at each paycheck can be more helpful. And it forces you to look at your budget and expenses much more often in smaller chunks, which you may find to be more manageable. Like zero-based budgeting, you need to give every dollar a job. To begin, make sure that you have the amount per paycheck you earn and how frequently you are paid, all of your expenses and their due dates. Remember, you need to include fixed monthly expenses, rent, utilities such as internet, variable ones, groceries and gas, and those irregular expenses to capture your true expenses. Think also of gifts for birthdays and holidays. They occur every year, but we often don't think about setting aside money for them. The same goes for medical bills. Look at past statements to get an idea of how much you typically spend on groceries or gas per month or gifts per year, and then use those figures to assign an amount on your budget. Let's see what this will look like. We'll follow Ariel and George, who are married with no children. They have decided to work on their budget because George recently lost his job due to the ongoing pandemic, and as such, they are living off of Ariel's salary of $59,588. So first, they'll gather all of their expenses, fixed, variable, and irregular, and make note of their due dates on a calendar. Beginning with their fixed monthly expenses, we have rent. For their small apartment is $1,109, and this is due at the start of the month. Their utilities total $477.31, and that includes electricity, natural gas, internet, cable, and water. For the purposes of this exercise, we will assume that these are the same each month, but generally such expenses as electricity and natural gas would be considered variable, since the dollar amount may fluctuate month to month. Although, useful note, you can ask some companies like PSG to figure out an average of your monthly payments to be used to charge you consistently throughout the year. These two, Ariel and George, usually pay around the beginning of the month. Car payments total $600 and is due at the end of the month. Ariel's federal loans cost him $135 a month, which he set up to pay on the third week of the month. Though deferred to the pandemic, they will still include it as an expense to have a better idea of their true expenses. Streaming services cost him $20.91 and is due at the end of the month. They are on a cell phone plan, which costs them $140 per month, and it's also due at the end. And Ariel's monthly Metro card normally costs him $137. Although he is working remotely and thus is in no need of the pass, he is keeping it on the budget. He would normally pay this on the first of the month. Next up, the variable monthly expenses. Groceries. Ariel and George could look through their prior monthly bank statements to get a figure of the monthly grocery expenses, but they've opted to look up an average for their area and found that per person, $471.34 is the average amount spent on groceries. So monthly, the cost for the two of them would come out to $942.68. Normally, Ariel or George would shop for groceries every other week, so it's about twice a month. They both love to cook, and as such, they rarely eat out. Gas. They don't use their car much, only at the weekends to visit Ariel's parents, who live about 20 miles away. The total trip thus is 40 miles, and with a gallon averaging about 20 miles, this means per month they use up about 8 gallons, 2 gallons a weekend, 4 weekends a month. With an estimate of $2.91 per gallon in New York, this equals about $23.31 per month on gas. Let's say they fill their car up twice a month, so the $23.31 would come up to about $11.65 per paycheck. Of course, you could also just do a review of your past month's gas expenses. And finally, those expenses that come up once a year, every year. There's their car insurance. With the annual rate that they pay at $1,286, we'll say the monthly expense comes to about $107.17. And gifts. Birthdays and holidays happen every year, and we sometimes forget to budget for them. Based on how much they spent last year, Ariel and George decide to budget an annual amount of $1,000 for gifts, which equals approximately $84 per month. Next, they'll add in their expected pay dates. Ariel usually gets paid every other week, around the first and third weeks of the month, in the amount of $1,799. Because he is paid every other week, there will be 2 months in the year for which he will receive a third paycheck. Let's keep that in mind when we discuss what to do if there's a surplus. Ariel has many options for how to go about creating his budget planner, but he's chosen to make his own Excel sheet. On the top, he'll create some columns for paycheck 1 and paycheck 2, and adding columns where he'll list the corresponding expenses. Next, he'll begin adding the expenses to either paycheck 1 or 2 based on the due dates. For paycheck 1, we'll assign those expenses that are paid at the start of the month. So that's rent, utilities, the Metro card, 1/2 of the groceries, and 1/2 of the gas. In the next slide, we'll see the remaining balance after we've used paycheck 1 to cover these expenses. Oof, oh no. Already we can say that Ariel and George are living beyond their means. They are still living as though they are a 2-income household. Let's continue and see how they're doing with paycheck 2. For paycheck 2, we'll assign those expenses paid at the latter half of the month. So it's car payments, loans, cell phone, streaming services, the other half of groceries, the other half of gas, car insurance, and gift expenses. Technically, these last two don't have a due date, but knowing that they are expenses for which they must budget, Ariel and George decide to assign it to the final paycheck. Let's see what the remaining balance is. Here we see that we have remaining balance for paycheck 2, $228.77, which means that they're in much better shape with paycheck 2. Okay, so it's time to reassess. Ariel and George will have to make tough decisions on what can be cut. So what can they absolutely not live without? Obviously, we have rent and utilities, or certain utilities, are non-negotiable. But perhaps having both cable and streaming subscriptions is not the best option for the current finances. So they've decided to cancel the cable for now. That saves them $100 a month. Here we have the utilities reduced to $377.31. Still, they will need to cut some more costs to ensure that they're not over their budget with paycheck 1. So George read an article on Business Insider that suggested ways of reducing the cost of groceries, including stockpiling, meal plans, etc., and which one blogger stated saved her 50%. Using these suggestions and others he came across while reading about budgeting tips on NerdWallet, including always checking the current stock before shopping, following favorite brands online for discounts, as well as signing up for loyalty programs at their preferred supermarket, and always reviewing a product's unit price as a tool for comparison, they project budgeting only $471.50 for groceries in a month.
Hold on one second, everyone. We're experiencing a little bit of technical difficulties.
I'm sorry about that. Okay. Since they budget a portion of each paycheck towards groceries, the $471.50 is applied as $235.75 per check. Still, Ariel and George have found that their first paycheck is overextended by $71.72. Paycheck 2, however, does have some remaining funds, so they decide to move the MetroCard expense to Paycheck 2. Ariel can buy next month's MetroCard at the end of each month using Paycheck 2. Now that's much better. Like we've said, budgeting is flexible. There are certain expenses that can be paid at different times. If needed, Ariel can schedule his loan payments at an earlier point in the month, but for now, it seems to work. Make sure it works for you. How you analyze your budget depends on your financial goals. Are you interested in savings or paying off debt? What do you do if you have a surplus? If you find that you have remaining funds, yay. Think about your goals. If you have consumer debt like credit cards, a goal could be to pay it off at a certain time. Or perhaps your goal is to be able to travel in a few years. So you could put a set amount of money away per paycheck. Are you trying to build or grow a savings account? Do you have funds set away for emergencies? NerdWallet suggests starting a fund of at least $500 for emergencies. Once you're able to reach that amount, continue putting money away until you've saved about 6 months worth of expenses. If you want more information on building an emergency fund, cutting expenses, or even methods of tackling debt, check out our webinar from last week on personal finance, which should be available on the website soon. Ariel and George found that they had a surplus for each paycheck 1 and 2. It's not much, but there were some funds remaining after the expenses were attended to. What to do with these funds? This is where their priorities will dictate how they will apply those funds. Ariel and George love to travel, but know that they should have some savings set up for emergencies, especially considering their current situation. Any unexpected expense, like a medical bill or issues with the car, can put them in serious financial difficulties. From paycheck 1, they'll assign the remaining $65.28 to a vacation fund. But the larger amount, the $327.52 remaining from paycheck 2, will be placed in a savings account. This means that by the second month of following their budget plan, at least $655 will be put aside for emergencies. What about those extra paychecks? Well, since they had assigned all of their expenses to paycheck 1 and 2, the funds from the additional checks can be applied to those areas of concern or interest. For the moment, Ariel and George are most interested in building up that savings account. So the entirety of those checks will be deposited to that account. But what do you do if you do not have a surplus? If you find that you're indeed overspending, try tweaking your budget. Reassess your expenses and try to live below your means. Look at what is costing most and what can be reduced. Are you eating out a lot or ordering food? Try cutting costs by reducing the amount of times you do, or cancel some subscriptions that are not truly necessary, at least until you have more funds. Ariel and George realized that they could live without cable, at least for now, and just use their streaming subscriptions. If they found they were still in a deficit, canceling the streaming subscriptions is an option. It's not an enviable one, but it's something that they can consider. Similarly, by following some tips, they were able to reduce the cost of their groceries. But if this is something that is not possible, perhaps they found that they ultimately spent more than what they had allotted as their grocery budget, they could reduce the amount that they spend on gifts by limiting the amount spent per person to say $50 a year or lower, or just one gift. Their $1,000 spent a year on gifts could significantly reduce. Other blogs provide tips on reducing electricity, gas, and water bills, including using smart power strips, replacing shower heads, using energy-efficient appliances, and taking shorter showers. There are many other types of budgeting methods which you might find useful. One such method is the cash envelope method. It's great for those irregular variable expenses that you find difficult to stay on budget. Based on what you have budgeted for groceries, let's say $200 per paycheck, on payday, after all your e-bills have been paid, withdraw $200 cash and place in an envelope marked groceries. You will only use that cash for grocery shopping. This is helpful and that gives you a tangible limit to spending. Some bank apps will actually allow you to make separate savings goals. I've used mine to essentially create envelopes for shopping, vacations, travel, etc. I know I can't spend any more than what is in that bucket. It can be a little tricky though if the envelope is shared by multiple people, so keep that in mind. Thebudgetmom.com has a pretty thorough description on using the cash envelope method and has other informative blog posts on budgeting. Another method often suggested as a good place to start, including by NerdWallet, is the 50-30-20 method, which is where you allow 50% of your monthly income towards your needs. That's rent, food, etc. 30% for wants, and 20% for savings and repayment.
Next up, we will discuss some tips and resources for budgeting. We shared a lot of information this afternoon, but we wanted to take this time to recap some key budgeting tips. Number one, create a spending plan or a budget. As you saw this afternoon, there were two examples of a spending plan. Through the examples of Whitney and Adiel and George, you can see that budgets are flexible and can be altered to meet your wants and needs. Spending plans or budgets are key in order to monitor your income, expenses, savings, and if you have debt, it helps with debt management. Number two, it's important to check your bank accounts. One of the most popular tips we came across is doing so. In order to manage your budget, checking your bank account will help you to analyze trends and also ensure your expenses have been paid. It also is the best way to check for any fraudulent transactions that may impact your budget. Number three is to track your spending. Another great tip in order to see where you currently are in your financial journey and reassess your budget as needed for future short-term and long-term financial goals. Four, don't forget irregular expenses. As we highlighted this afternoon, these are the expenses that come up on a non-routine basis. For example, if you have any subscriptions that are charged once a year, for example, for me, I have Disney Plus that's charged once a year. From my own personal experience, I found it is helpful to set a calendar reminder on your phone or preferred calendar platform for these irregular expenses. Lastly, don't give up and celebrate your wins. We know that at times budgeting can be overwhelming, but according to Next Advisor, more and more Americans are focusing on saving their money. The national savings rate, or the percentage of people who have saved, went up from 12.7% in March to 32.2% in April. Americans are saving more and more money each month, or they're interested in beginning to save. Wherever you are on your financial journey, we encourage you to use these budgeting tips to assist you with your goals.
Throughout, we've mentioned the budgeting resources we've used for the presentation or for our own needs. Here are some of those along with a few others. Social media has many pages which you can follow for support and ideas. Two, our personal finance community and debt-free community. There are websites and blogs too, such as YNAB, the You Need a Budget site, which has blogs and free webinars. The Budget Mom, as mentioned during the cash envelope method, which is super helpful. NerdWallet, iGrad, and Clever Girl Finance are also useful sites to building your budget and finance knowledge. There are plenty of videos and webinars that can guide you on your journey to understanding more about budgeting. You can search on YouTube or visit some of the sites mentioned which offer videos or webinars for free. If you prefer to listen rather than watch, there are plenty of podcasts out there. Many of the blogs and sites already mentioned, YNAB, Clever Girl Finance, NerdWallet, have their own corresponding podcasts to help you answer your budget and finance questions. I find podcasts of all sorts incredibly useful and convenient. I could listen to an episode while running errands or doing chores around my home. And finally, there are plenty of books on budgeting. I used much of You Need a Budget by Jesse Meacham as a reference point when reviewing Budget by Paycheck. There's also Rich Dad, Poor Dad, and Broke Millennial.
As many have been impacted by the ongoing pandemic, it is important for us to briefly mention how budgeting can help you during this time. According to CNBC, there are 3 steps that research recommends. One is mental accounting, which is essentially the zero-based budgeting method that we reviewed this afternoon. It is important to understand your spending category limits. If you know you're out at the store and that your food budget is $400 for the month, you want to ensure that you purchase the food items you need while making a mental note of how much your food budget you can spend weekly or bi-weekly without going over the budgeted $400. Next is cash output. And that is the budget by paycheck method that we previously went over. So if you're receiving weekly payments, you want to budget based on the time period between your cash input, which is income, while understanding your cash output, which is your expenses that you have upcoming. And lastly, plan ahead. Plan for your future by setting long-term goals. It is important to remember these goals and take the necessary steps in the short term in order to accomplish all that you desire for your financial journey. We empower you to start or continue working on your short-term goals now and create a budget that works best for you.
Now that we have gone over budgeting examples, tips, and resources, we would like to take the time and relaunch the poll to see if any participants feel differently about budgeting. I'll just give you a few more seconds. Okay, I think we can close the poll. Okay, it looks like more of you are thinking that budgeting is important, which is great. And yeah, some of you are finding it exciting. It's great. Thank you. Remember, a budget is a personal tool to help you reach your financial goals and responsibilities. Keep your priorities in mind when designing your budget. And if your needs or your priorities change, the budget can too. Budgets are flexible. At least once every few months, go through your recurring expenses and consider what you like to keep or what to remove. It's helpful to revisit your budget and finance overall quite often. And make sure to have fun and reach those goals. I think we can open up for questions.
We did have one question that someone submitted. What's the best way to get myself out of living paycheck to paycheck? In other words, to have enough money to pay my bills for the following month, aside from my savings?
That's a great question. I think going back to the surplus slide, or if you're in a deficit, Yvonne made some really good points about maybe cutting back on some of your expenses that you currently have, reassessing your budget to see if you can change deadlines. I've even personally called to see if my credit card company would be interested in changing my APR, so that way my monthly interest rates or my monthly payment is less. So there are definitely ways that you can get out of that living to paycheck by paycheck cycle. I completely understand. I've been there myself, so don't feel like this is just you. And some of the other tips that I took was really the tracking my spending has helped me tremendously, and really analyzing places where I may be overspending. For example, food was such a high amount that I was spending on every month. So just even making that one change has significantly helped.
I agree. I was actually thinking that by tracking your spending and looking at where your money is going, sometimes you may even find there are expenses that you didn't even realize you were paying monthly. I had I think a magazine subscription that I had had done a couple of years ago, and I was able to cancel that. So definitely paying attention to where your money's going, and seeing if there's anything you can cancel.
Are there any other questions? Feel free to put them in the chat.
As Teresa mentioned earlier, we know this is a lot of information to absorb. We'll give it about 2 more minutes, and if no questions come up, we will begin to wrap up.
I have a question. Should I have a budget for gifts So yes, I agree 100%. That was another thing that I changed for my budget. Before, when birthdays or events would come up, I would just try to scramble to figure out how I was going to cover the cost, or I would just put it on a credit card. Now, if I know I have a calendar with everyone's birthday on it. Now, if I know that there's an upcoming birthday, I do set aside for myself. I call it miscellaneous funds. I set aside miscellaneous funds to make sure that I have the money allocated for that gift. And I make sure that I set realistic expectations. So if I know that I'll probably spend $50 to $60, I try to estimate maybe 55, 60 on the average side, understanding that I don't necessarily need to spend the whole $60, but it for me, it reduced the stress of every time there was a birthday or event having to pull money together because I already knew it was in my budget. So I highly recommend it. I'm not sure if Yvonne wanted to add more.
Not much, but yeah, definitely making a budget. My husband and I actually cap a certain amount of money for total for the year, and then between Christmas or other holiday and birthdays, we try not to go past a certain amount. It's if you look at least for me, when we looked at how much we actually were spending, it was a bit more than we thought, because a lot of times we were just all right, we'll buy this and we'll buy that, and it was kind of scrambling, like you said. So by having the set amount for per holiday per person, it was easier to not spend a crazy amount of money.
Okay, we have another message in the chat. The question is, I find it hard to budget because it's hard for me to keep my word. I sometimes say I'm going to save X amount of money, and I don't end up meeting that expectation. Then I look over my expenses and realize it was $1 here and there that became more than I thought. Do you recommend tracking expenses daily or weekly?
So personally, I recommend setting a schedule that you can keep for yourself. I would say for myself, I do try really hard to track my expenses daily, because like you said, sometimes $1 here, $1 there, or running to your local grocery store, or going to the bodega to pick up something really quick. Sometimes those funds you forget about, and then when you're looking at your budget, you see, oh, I may have gone over a little bit. So I personally do track my expenses daily, but you also don't want to set yourself up. You have to manage your expectations. So that if you know that you actually don't have the time, because a lot of us are busy, to track it daily, then every other day or a schedule that works best for you. But initially, I did track my spending daily, and that also kind of helps with what you were saying previously about sometimes saying I'm going to spend X amount of money and then not. Trust me, that happened to me, especially in the beginning of my journey. I would say something very unrealistic, like I'm only going to spend $25 on miscellaneous funds every 2 weeks. But after looking at my spending and tracking my spending, I realized I think I need a little bit more than $25 miscellaneous every 2 weeks. And I was able to increase that. So, and that's what we mean by budgets are flexible. The key thing is not to get discouraged. If there's 1 month where you say you're going to spend X amount of money and you don't meet that expectation, the great thing about budgeting is that you can always readjust or start anew or find a budgeting method that may favor where you currently are in your life right now.
Yeah, I would just like to add that Teresa, you mentioned the set it, forget it thing with savings, maybe do that. And then the cash envelope method. I know my mom, for instance, used to use that. You put a certain amount in an physical envelope, or you do it in your as a bank app or something. Once you can't go past that. It helps to have that. That's an actual limit you have. $200 or $300 for the month or for the week or whatever. However it is that you're organizing your budget. It helps if you actually have something like a limit in a bucket.
Thank you, Yvonne. We have 2 more things. One, just for clarification, we have a question. Can I have the info for the envelope budget mentioned in the presentation? Can you just remind us, will we be sending the resources mentioned as a follow-up?
Yeah, there's a document with all the resources, including the budget mom, who talked about cash envelopes. So we will be sending that shortly.
Okay, thank you. And the second question I have here, one first, thank you, this makes sense. Do you use an app and sync your cards for easy tracking? I have used EveryDollar, but that one is $9.99 a month. So I guess, is there any recommendations for apps that you have?
I believe NerdWallet actually, I believe you have to link all of your accounts, but it does then organize everything and then track it for you, and it's free. Mint is also free too, but I think you can also sign up so you have all your accounts. YNAB that's another one we mentioned. It is $84 a year. They have a free, I think it was a 30-month trial. They can try it out and see if you even want to do an app as well. But those are, there's a link in the resources with 6 big apps that are suggested. I think it was by Forbes. So you can look that as well in the resources.
And if apps are not your thing as well, then I just wanted to highlight that I track my spending using my digital notebook, so my iPad, and I also track it on an Excel spreadsheet. That way I can do any formulas and graphs to kind of analyze my trends. That's when those are the 2 ways that I track my spending. So I use those interchangeably.
And another question we have, is setting up automatic payments a good way to budget?
So setting up automatic payments is definitely a personal preference. I thoroughly enjoy setting up automatic payments. Sometimes you'll find that you'll get a discount for doing an automatic payment. So if you know that you already have the budget for that line item, and you know that you'll have the money in your account on that due date, then I recommend setting up an automatic payment. But again, that's going to change per person. For me personally, I have an automatic payment for my cell phone bill, and they do give me a 20% discount off for doing so. And there are other companies that would do something similar. So I definitely would research the vendors that you use for your expenses and see if they offer any programs for automatic payments. But I highly recommend it, and I do enjoy it.
Okay, I do not see any more questions in the chat. So I believe at this point, we pass it over to Adrian.
Thank you, everyone.
This concludes our presentation. Thank you all for attending today's webinar on budgeting. We hope you found the information helpful. As a reminder, a link for the webinar will be shared with you soon. Also, you will be receiving an email with resources from the presentation. Have a wonderful day, everyone. Take care and be well.